You know, when people talk about money, a lot of times they talk about risk. They'll say things like, put your money in a bank, you might lose it. Or maybe even, don't put your money in a bank, you'll lose it. But probably the one that I hear the most often is, investing is risky, you'll lose money. The one thing that I've learned throughout the years is that the biggest risk to our finances is usually the thing we never think about, our job. Specifically, our one job. People spend so much time trying to find the perfect investment that they miss out on the most important part of building wealth, growing your income. And not only growing your income in terms of earning more, obviously that helps, but growing your income in terms of building multiple income streams. I'm sure you've heard people say, whenever you invest, you should diversify. And we can argue back and forth about whether that's good or bad, but the whole point of people saying to diversify is to reduce your risk. Basically what they're saying is, don't put all your eggs in one basket because you might lose the basket.
Okay.
They say that when it comes to investments, but have you ever heard someone say, hey, you should diversify your income? No, almost never. Your income is the thing that's the most at risk. Anytime you just have one job, you're dependent on that one company, on that one manager, on that one change that you have no control over, and your whole income can go away. All you have to do is look at what happened 2 years ago. When COVID hit in March of 2020, the economy and a bunch of businesses shut down. People lost their jobs.
Weekly jobless claims had never hit that million mark before the end of March, and now they just can't seem to fall below it.
So even if you were making good money, all of a sudden you couldn't pay the bills because you didn't have any income at all. Just look at the impact of the number of jobs across industries that were put at risk because of COVID. And especially when you look at the breakdown between low-wage jobs and high-wage jobs, the low-wage jobs are by far and away the most impacted, which means that the folks that are likely struggling the most are the ones that are going to be impacted the most, which makes it even worse. And I know some people will say, but isn't that what an emergency fund is for? And absolutely. Everyone should have an emergency fund. There's no question about that. But when something like the pandemic hit, I don't think anybody would have had an emergency fund to last for that long with no income at all. And at this point, we're a couple years past when this data kind of came out, right? And the economy is slowly trying to recover. But even with the issues that we have now, sky high inflation, a recession likely coming, all these common themes are coming up again. One of the major things that's likely to happen if we go into a recession is unemployment will rise. Companies aren't making as much money. They need to slow hiring. They need to get rid of folks in some cases. And that stuff's already coming out in the news from the big tech companies. You have Snapchat announcing it's going to miss earnings and it's going to slow hiring. You had Coinbase badly missing earnings and saying they're going to slow hiring. And even Facebook said that they plan to reduce hiring as their growth slows. Because these are some of the biggest tech companies in the world that have a lot of cash on hand. They're some of the most financially secure companies out there. And if they're already slowing their hiring, then it means that companies down the line that maybe aren't as strong as they are going to be impacted too. I'm not trying to scare you. I'm just trying to show you the importance of diversifying our income streams and building additional income streams outside of your job so that in case something happens, you at least have some income coming in. So now that we talked about all this doom and gloom and we know why it's important, what can you actually do about it? So what you want to do is build additional income streams before you need them and continue to build them up over time. And here's a couple of the main ways you can do that. One, you can invest in dividend stocks. So dividend stocks are a relatively easy way to build a passive income stream. Now, in order to build an income stream of size, you'll have to put a lot of money into it because even the best dividend kind of portfolios will pay anywhere from 2 to 5%. But the great thing about dividend stocks is it's a relatively easy way to get started. It doesn't have to be complicated either. You can put it into an existing ETF and not have to pick your own dividend stocks. If you do something like the Schwab Dividend Equity ETF, it's literally just you putting money into an account every month and watching it grow over time. The other great thing about dividend stocks is that you don't really need to do anything except open a brokerage account. It's not something you have to manage. It's not something you have to run. It's just something you continue to put money in and it continues to pay you. Another way to build an income stream, real estate. It may not be a good option for everyone, depending on how much interest and knowledge you have about real estate or how much time you want to spend doing it. There's obviously ways to kind of get around that. And your local real estate market may not be one that's really good for investment right now, depending on how everything's going. But even if you can't or don't want to buy actual real estate, you can always look into investing in REITs and REIT funds. A REIT is basically a real estate investment trust, and it's something you can buy in your brokerage account that pays you dividends. There are special tax considerations for REITs as taxed as ordinary income, but it is a way to build a passive income that has exposure to real estate as opposed to just dividend stocks. Obviously, if you live in an area that's good for real estate investment and is something that you like doing, you can get much higher returns doing it that way. But if that doesn't work for you, a REIT can be a nice alternative. Then lastly, another way to increase your income, have a side hustle. And this can be as big as you having a small business that one day you want to replace your regular job. Or it could just be something that you do on the side for a little bit of extra cash, whether that's being an Uber driver, doing lawns on the weekend, whatever it might be. Also, if you're creative or someone in your family's creative and makes things, being able to sell stuff on Etsy is another option. Or if you have particular skills or information that you think is valuable to people, you can create digital products and sell them online. And these are just examples, but the point is that you could spend additional time outside of your job to create additional income for yourself. And just to be clear, these things aren't mutually exclusive. Let's say you decide to be an Uber driver on the weekend. Well, any extra money you get from your 9-to-5 job and any extra money you get from Uber driving, you put them into dividend stocks, or you put them into a REIT or real estate. Now all of a sudden you're taking this active income that you're earning with your time and you're putting it into something that gives you passive income. And this is one of the ultimate money hacks, right? How can you create income streams that aren't attached to your time? And of course, these things aren't going to happen overnight. These are things that we have to do and systems we have to put in place that we keep contributing to so that one day they become big. So let me give you a real quick example. So let's say you're able to save $5,000 into a dividend stock portfolio. And let's say your portfolio pays an average of a 4% dividend every year. So that's going to be an extra $200 a year in income for not doing anything. And I know you're probably saying $200 a year is nothing. I can't do anything with that. You're right, but it's just a start. Now you add an additional side hustle to it. And let's say you do Uber driving on the weekends and you make maybe $400 a month doing that. And then maybe your wife or people in your family are good at crafts and they put some things on Etsy and they make another $200 a month doing that. Now you're getting up to $600, $650 a month of extra income. And the more you do, the more you put into it, the more it stacks up over time. Plus, look, as your additional income grows, it gives you options that you didn't have before. Maybe you want to start a new career in a different field that pays a little bit less, but it's more in line with what you're interested in. Having additional income that's outside of your job can help that. Maybe at some point your additional income becomes enough for you to leave your job altogether and work on things that you really want to work on or spend more time with your family. Reducing your risk of losing your income is one of the most important things you could do for financial security. If you guys have questions on building your income streams, put them down in the comments below. If you want to watch more videos on how to build your income and how to invest your money, watch the videos here on the end screen, and I'll see you guys next time. Peace.